Hello, everyone, and welcome to today's webinar, Political Law 101 Bootcamp Part 2, Political Contributions and Supporting Candidates. Today's webinar is being recorded, and you will receive a follow-up email within 24 to 48 hours with a link to view the recording and a copy of the slides. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time during the presentation. We will collect these and address them during the presentation. Today's presenters are Jim Kahl and Heidi Abegg, partners at Whiteford. I'll now turn it over to Jim.
Well, good afternoon and welcome everyone. I'm Jim Kahl and joined by my partner Heidi Abegg, and together we head up the political law practice here at Whiteford. And this is part 2 of our political law bootcamp. Today we'll be focusing on campaign finance, political contribution issues and questions. We had part 1 of our program a couple of months ago that dealt with lobbying compliance. If you're interested in seeing that, it is available on the Whiteford website, and you can view that at your pleasure. We will be doing a part 3 of our bootcamp in about a month or so. That will focus on government ethics and gift giving issues, so you can be looking forward to seeing invitations coming your way for that. So if we could forward the slide right now. On to the next slide. There we go. So here are the topics we'll be talking about today. We'll go through an overview of political contributions and the federal and state laws that regulate them. We'll talk about political action committees, what they are, how they operate, how you raise funds for them, how they can spend their funds, and then we'll be talking about a specific kind of campaign finance law that applies to state and local contractors. And we'll finish with some compliance takeaways for you to be considering for your organizations. As Elena mentioned, please ask your questions as we go along. Don't wait till the end. We have about 40 minutes of prepared material, and so there's plenty of time to get to your questions. So ask the question whenever you'd like to. If we could advance to the next slide, please. As we did with our lobbying presentation, we always like to begin with sort of a mile above the earth view of some of the issues that underlie discussions about political contributions. First thing to keep in mind is that these rules can apply to your organizations, but they also may apply individually to employees in the organization. Campaign finance laws are complex and they differ significantly as you go across the country. So if you're familiar with the campaign finance laws in California, there's no certainty that the laws in New York will be similar or any other state, and they're not. And there are unfortunately frequent changes in these laws. Always keep in mind that others are watching your organizations. It might be regulators, it might be the media, it might be competitors. If you're a corporation, it might be shareholders. If you're a nonprofit, it might be your donors. So there are those who are watching, which underlies the need for strong compliance procedures and strategies as you move forward. The bottom line here, however, shouldn't be that it's all risk. The laws here present many opportunities for achieving your organization's policy goals and interacting with public officials. But the most important thing is to develop a culture of asking first in your organizations. Whenever an employee, a leader in the company is thinking about making a contribution, there should be a process for vetting that and getting approval in advance rather than having to be reactive and figure out whether a contribution made is impermissible. So let's advance to the next slide. Can actually go 2 slides. Let's start off with the general rules governing contributions by incorporated entities. And here we're going to be discussing both for-profit corporations and non-profit corporations, like associations, when I'm referring to a corporation or incorporated entity. At the federal level, corporations are absolutely prohibited from making contributions to federal candidates, federal parties, or for other federal political committees. There is an exception, we'll call it that for now, that we'll discuss later, that corporate entities are allowed to sponsor independent candidate advocacy communications. Again, more to follow on that. Once you get to the state level, the laws are a bit all over the place. There are 5 states, you see them in that first bullet there, that allow unlimited corporate contributions. One of those states, Oregon, their law will change in 2027 and they will have limits on corporate contributions. When you look at the other states around the country, corporate contributions are prohibited in about 20 states, and the others impose some sort of limits on political contributions. We've seen in recent years many states have increased their contribution limits, and that's either because there's an inflation adjuster that's built into the law, or some of the states just had very low limits. They were very old provisions and they needed to update them and to bring them more into a modern era. Contributions to ballot measures and initiatives and referendums, there's no limits on the amounts that can be given to committees that support those ballot measures. For those of us who live in the DC area, there was a ballot measure in Virginia just yesterday. Finally, charitable organizations, 501c3 organizations, absolutely prohibited from making political contributions or other types of campaign intervention. This is by virtue not of campaign finance law, but of the Internal Revenue Code, which prohibits charitable contributions by charitable organizations. Let's move to the next slide. Because of this prohibition on contributions at the federal level, many organizations will consider having a political action committee, PAC. And so what is a PAC? Well, it is and we're going to start talking about it at the federal level. A PAC, it's a nonpartisan, tax-exempt entity. It's registered with the Federal Election Commission. It's called a separate segregated fund, and it is legally a separate entity from the organization that is sponsoring it. The PAC can do all the things that the corporation itself can't do. It can make political contributions to candidates, political parties, committees, and to other PACs. The PAC itself not only is sponsored by the corporation or association, it is legally required to bear the name of that organization. One of the benefits of this kind of PAC, which is a connected PAC, is that it can receive administrative and solicitation support from the corporation for its operations and its fundraising. So those who donate to the PAC can have comfort that their funds are not going to be going to support overhead, but will be used for the intended purpose of supporting candidates. PACs, connected PACs, are funded with voluntary contributions from qualified individuals. This is referred to as the restricted class, and only restricted class individuals can contribute to the PAC. Heidi will be talking at greater length about who is in that restricted class and who can be solicited and who can contribute. At the federal level, there are actually 2 kinds of connected federal PACs. An early stage PAC is called a not multi-candidate committee, very snappy name, while more mature developed PACs are called multi-candidate committees. Here we're talking about PACs that are connected to organizations, whether they're corporations or associations. There are also non-connected PACs. Heidi will be mentioning that when we get to her part of the presentation in a few minutes. We can move to the next slide, please. So why have a corporate PAC? A lot of reasons. The PAC allows your organization's voice to be heard on important issues and public policy matters. As we mentioned, you can support the candidates who understand your organization and share your concerns. And very importantly, a PAC is a well-established vehicle for making political contributions. PACs have been around since the 1970s. It is a safe vehicle. Contributors can feel like they're not giving to some dark money operation, but this is a long established safe method of making political contributions. Let's move to the next slide. Who administers the PAC? Well, at the federal level, the only legally required officer is a treasurer. However, for most well-established PACs, sizable PACs, there is a board or a committee of some kind that is formed to oversee the PAC, usually appointed by some group of officials within the organization, and they'll oversee the operations. Frequently, it is that PAC board that is approving all of the contributions that the PAC will be making. We think it's very advisable for the PAC to have bylaws to guide its operations and procedures. We also believe it's advisable, and the FEC, Federal Election Commission, recommends appointing an assistant treasurer to the PAC who can represent and speak for the PAC with the federal regulators in the event that the treasurer is unavailable. We often get the question from individuals who are thinking about being on a PAC board as to whether they will have any personal liability for being on the board. And generally speaking, the answer is no. If the PAC files its reports late and there's a fine, the individual PAC board members are not responsible for that. On the other hand, if an individual engages in knowing, willful, illegal conduct, of course, that could give rise to sanctions. Let's move on to the next slide. There are many regulatory requirements that go along with operating a PAC. For example, there are monthly or quarterly reports that are filed by the PAC, depending upon the schedule the PAC is using. The PAC is required to obtain certain information from its contributors, things like names, addresses, employers, the person's job, their position in the organizations. PACs have to scrutinize the contributions that come in very carefully. This is the job of the treasurer or his or her designee, to make sure that contributions aren't coming from prohibited sources, to make sure that contributions do not exceed the limits of the individual contributors. So that scrutinizing of contributions is an important role of the treasurer. There are rules for handling funds, depositing funds into the PAC, and in this regard, the FEC recommends, and we think it's highly advisable for the PAC to adopt certain internal controls for management and oversight of funds. You want to have procedures, you want to have duplication in there to avoid things like embezzlement of funds from the PAC. And finally, there are document retention records for all of the records of the PAC. Let me mention one thing, and it's not a slide on this, but this deals with state PACs. We've been talking primarily here about federal PACs. All of the states have laws and regulations dealing with PACs established under state law that contribute to state candidates and committees. There is some ability for a federal PAC to be able to make contributions in state elections. In some states, it is very easy, and there's minimal additional requirements that go with it. In some states, a federal PAC might have to file reports, and you want to look at that carefully if you're considering using your federal PAC in state elections. And there are a few states where it will simply be impossible to use your federal PAC in the state elections, which means if there's a prohibition on corporate contributions and that's not an option, then the organization would have to establish an entirely new separate PAC in that state and follow the state's rules regulating those PACs. So with that, let me turn it over to Heidi at this point to talk about fundraising for the PAC and other activities by the PAC.
Well, we've touched on the administration and setup of the PAC, but now we're going to turn to how to get money into the PAC. What I'm going to talk about next is focused on federally connected PACs. And as Jim mentioned, many of the states have similar requirements, but some have different laws entirely when it comes to corporate PACs. So it is important to review your particular state's laws because, as Jim mentioned, merely having a federal connected PAC does not automatically mean you are free to engage in state level activities. Next slide. So just a reminder, we're talking about connected PACs and not unconnected PACs or independent expenditure PACs. Unlike unconnected PACs and independent expenditure PACs, which can solicit from the general public, a connected organization or its PAC can only solicit from its restricted class. And the restricted class depends on the type of connected organization. For a corporation, which is not a trade association or membership organization for this purpose, a company and its PAC can only solicit and accept contributions from its restricted class, which includes the following: individuals who run the organization's business, such as the officers, the executives, the managers, individuals paid a salary and not an hourly wage. Corporate directors, if they receive a director's fee or stipend. Non-managerial professional employees, so employees of or members of the recognized professions and other highly skilled employees, such as attorneys or engineers. Corporate stockholders, and this can include employee stockholders, such as those that participate in an ESOP. They are solicitable if they have a vested beneficial interest, a power to direct how their stock will be voted if they have voting stock, and a right to receive dividends. And it also includes immediate family members, that is, household residents of all the persons just mentioned. It includes restricted class members of parents, branches, divisions, subsidiaries, and affiliates. Important to note, it does not include professionals represented by a labor union, salaried foremen and lower level supervisors, former or retired personnel who aren't stockholders, or consultants. Also excluded is the general public, vendors, clients, other PACs, and independent contractors. We could move to the next slide. The trade association restricted class is a little different. It is composed of individual association members, if there are any, members of the restricted class of corporate members, if the corporate member gives permission, and this is referred to as prior approval, executive and administrative employees of the trade association, individuals who run the trade association's business, such as the officers, executives, managers, and members of the recognized professions mentioned earlier, lawyers, engineers, and immediate family members of these persons. Another thing to note is that members for these purposes also have to fit the FEC definition of member. The FEC has requirements for members and requires certain things to be in the organization's bylaws. It also requires that members either pay annual dues or have some sort of significant organizational attachment, such as direct participatory rights and governance, for example, the right to vote for at least one member of the board or the right to vote for officers. And it's important to note that state laws regarding who is a member of an association is inapplicable to whether an organization has members for FEC purposes. A membership organization, such as a 501c4, its restricted class includes non-corporate members, executive and administrative personnel, and the families of both groups. But unlike the trade association's restricted class, a membership organization cannot solicit corporate members, even with prior approval. If we could go to the next slide.
Heidi, before you go on that second bullet, and you just mentioned prior approval, it's important to note that a corporation can only give its prior approval to one association per calendar year. So it's a limited authority.
Thank you. If we could go to the next slide. Because a connected PAC can only solicit from its restricted class and specific notices are required on those solicitations, it's important to know what a solicitation is. A solicitation can be oral or written. It can occur in a speech, an email, or at a trade show booth. The FEC defines solicitation broadly and includes a request for a contribution or a direct ask for money, providing information about how someone can contribute, and encouraging support for a PAC's activities. And here the context is key. For example, a PAC presentation is by definition a solicitation. A sign at a booth saying, "Ask us for information about the PAC fundraiser is also a solicitation. It's important to avoid inadvertent solicitations outside the restricted class. If there is an inadvertent solicitation, you should correct it immediately by refunding the contribution and taking steps to prevent another inadvertent solicitation. A PAC can accept an unsolicited contribution, but it cannot publicize that right because that in itself is a solicitation. Statements that don't encourage support of the PAC are not solicitations. These are primarily factual statements. For example, announcing the existence of a PAC, providing statistical information about the PAC, providing a simple list of candidates supported without comment or embellishment is also not considered a solicitation. And as mentioned, solicitations, whether those are oral or written, do require certain notices called disclaimers. Those include a statement of the political purpose of the PAC, a right to refuse to contribute, the fact that any suggested amount is only a suggestion, and that a giving or a refusal to give will not benefit or disadvantage the person being solicited. We could proceed to the next slide. There are a number of ways to fundraise, but you still need to keep the solicitation directed at the restricted class. You can solicit eligible contributors in the restricted class through flyers, email, company website. If you are soliciting on a company website, that solicitation needs to be behind a password protected wall so that only those in the restricted class can view that solicitation. You can have PAC fundraisers, luncheons, golf tournaments, and other parties or similar type events, but the guest list should only include the restricted class because again, the price paid to attend the fundraiser is a contribution, even if part of it is used to defray the cost of the fundraiser. Raffles are also permitted if they are allowed by your state's gaming laws. Prizes or recognition for contributions at certain levels are also permissible. The organization can match individuals' PAC contributions with company contributions to charities. An organization can also raise contributions through payroll deductions if certain requirements are followed. And again, it's important to note that unlike non-connected PACs, the connected organization can pay the cost of administrative and solicitation activities. One thing to note here is that a PAC must reimburse a connected organization for costs of promotional items, prizes, or entertainment if those costs exceed 1/3 of the total contributions raised at the event. And a final note on this, a PAC cannot accept prizes or entertainment donated by corporations other than the connected organization. However, a trade association is permitted to accept donated prizes and entertainment from its members. The next slide, please. So now that we've looked at how money can come into the PAC, we're going to look at how it can go out. Contributions to the PAC are limited to $5,000 per individual per year and are not indexed to inflation. PAC contributions going out have different limits, and we've noted those in the chart. It's important to note that contributions from a multi-candidate PAC remain at $5,000 per candidate per election. This limit is not indexed to inflation. So one of the key disadvantages of a multi-candidate PAC is that it does have lower contribution limits to national party committees, state and local parties, PACs, and there's no indexing for inflation for those limits. If we can move on to the next slide. So now that we know the limits, we're going to look at how the PAC can fundraise for candidates, which involves differences from how the PAC can fundraise for itself. The PAC can host a fundraising event for a candidate or multiple candidates and invite the general public. It is not limited to raising funds for candidates only from its restricted class. The PAC can solicit contributions from persons outside the restricted class, and it can pay for costs of the event up to its contribution limit to the candidate. These payments to cover the costs are treated as in-kind contributions to the campaign. The PAC can join with other PACs and individuals in sponsoring the fundraising event. There are some limitations and restrictions that I'm going to mention just briefly due to the time that we have. Who collects the contributions at the fundraising event is important. If the campaign collects all the contributions, only the limits to the candidate from the contributor are affected. If the PAC collects the contributions for the candidate, then the earmark contribution rules apply. So if the contribution was solicited from the restricted class by the connected organization and then collected by the PAC and sent to the candidate, it counts as a contribution to both the PAC and the candidate and from both the contributor and the PAC to the candidate. So it's important to structure the fundraising event for candidates properly to avoid those double counting of contributions. If you go to the next slide, please. This is going to be a good segue into some other contribution issues. Next slide. As I mentioned, contributions can take the form of not just direct monetary donations, but in kind or non-monetary donations of goods or services, either offered for free or at a discount. The political contribution limits, or the political contribution limits, apply to monetary and in-kind contributions. And there's various examples of these. Candidate fundraising events held on company property or at other locations, product donations for fundraisers, such as candidate golf events, paying for candidate polling. A PAC can contribute goods and services only if it has purchased those goods and services with its own funds, or if an individual has lawfully donated them to the PAC. And who can pay for those, again, depends on what the item is going for. The PAC needs to inform the recipient committee of the value. At the state level, certain forms may be required in order to do that. Goods such as facilities, suites, supplies, or mailing lists are valued at the price the item would cost if it's purchased or rented at the time the contribution is made. Next slide, please. There are no end runs allowed. Conduit or straw donor contributions are prohibited under federal law and every state law. These laws prohibit a person from making a contribution in the name of another or knowingly permitting one's name to be used. Organizations cannot reimburse contributions through salary increases, bonuses, or other means. And foreign nationals, which I'll talk about in a minute, cannot make contributions through another. So contributions and compensation should never be tied to political giving to avoid any kind of a conduit or straw donor issue. The Department of Justice and states have been actively prosecuting conduit schemes. This is a stable area of the law. It's usually uncovered by whistleblowers, but sometimes through review of campaign finance reports. It's important to only make contributions out of the PAC's own funds or one's own funds. You should carefully scrutinize business expense requests, check requests, and ensure that there are proper receipts for reimbursements. It's also helpful to have language in contracts with vendors and others that prevent payment for services or business expenses to be used to make contributions. Next slide, please. Foreign nationals, including individuals and entities, are prohibited from making contributions or expenditures in connection with any election that's federal, state, or local. In some states, this also includes ballot measures. Individuals may contribute to candidates and political parties and PACs, but they must be U.S. citizens or lawful permanent residents. And it's also important to note that foreign nationals cannot direct or oversee U.S. corporate contributions or manage a corporate PAC. So you need to make sure if your corporation or association has a foreign parent or foreign nationals on the board, that they are not involved in any decision to form a PAC or manage or oversee the PAC. And with that, I'm going to turn it over to Jim to talk about public contractor contribution restrictions and other issues.
Thank you, Heidi. Before I get into the topic, I did want to mention one point about the conduit schemes that Heidi was talking about. When I worked at the Federal Election Commission, we saw a lot of cases that dealt with conduit schemes. And you'd like to think that people were clever in the way they would do and try to funnel money into campaigns, but oftentimes they were fairly clumsy. And for example, we would see cases where a manager in a bank who was also managing a campaign would provide bonuses to folks working in the bank, and it was the only bonus anybody ever got in the past 20 years, and every single penny of those bonuses went to the campaign of the that the executive was managing. They were thinking that this was a clever way to get around it. Those kind of schemes normally unwind, and somebody normally speaks, and the conduit is revealed. And as Heidi mentioned, they're prosecuted very vigorously by federal and state regulators. So what I want to turn our attention now is to this category of public contractor contribution restrictions. If we can move the slide ahead, thank you. These are referred to generally as pay-to-play laws. They are largely a creature of state and local laws as opposed to federal laws. And in a nutshell, what these laws do is they prohibit or restrict political contributions by state and local contractors and bidders. These restrictions can apply not only to contributions by the company or its PAC, but sometimes the contributions restrictions apply to officers, directors, senior managers, and even spouses and children of those individuals. So it gives you a sense of how intrusive these laws can be, that they limit political activity by people who aren't even employed by the company. And by and large, these laws have been upheld as constitutional around the country. The laws may also have registration or reporting requirements that go along with them. The real rub of the pay-to-play laws lies in the potential sanctions. Under some of these laws, bids can be disqualified, contracts can be voided, violators can be barred from future bidding, there can be fines, and sometimes for very egregious conduct, there can be criminal sanctions. So rather than just a fine that you might get for an improper campaign contribution, here the sanction can go to the very core of the business of the organization. The laws oftentimes apply much beyond what we normally think as public contractors. So we normally think about people who sell goods or services to a state or county or a city. But in some states, for example, economic development agreements are covered by pay-to-play laws. These would be arrangements where a corporation gets a tax incentive for building or expanding a facility. In some states, Connecticut is an example, they believe that those kind of agreements are covered by the state pay-to-play law. There are also specialty kinds of pay-to-play laws around the country. There are those that apply to municipal bond brokers and dealers, as well as pay-to-play laws that apply to public pension fund managers and limiting their ability to make political contributions. So there are laws that need to be looked at very carefully because the sanctions could be quite significant and hurt the business that's making the contribution. We can move to the next slide. So on the screen is a list of states that have state-level pay-to-play laws of some kind. And at the local level, that is merely a sampling of some major cities and counties that we know have pay-to-play laws. There are literally hundreds and hundreds of pay-to-play laws across the country. It is quite possible, given the business of some major corporations that and the amount of product or services they sell to governments writ large, that they could be covered by literally every pay-to-play law that exists in the country. We're going to be talking more about pay-to-play laws in part 3 of our boot camp when we're dealing with gift giving and government ethics, because after all, this is really a government ethics concern that underlies pay-to-play laws. Let's go on to the next slide. Our next topic here is candidate advocacy communications. We could advance the slide. I mentioned these earlier sort of as an exception to the prohibition on corporate contributions at the federal level. It's really not an exception. It's a different kind of animal. And since 2010 and the Citizens United decision, incorporated entities can sponsor independent candidate advocacy communications. And this is the law at the federal and state level. Those that sponsor these kind of communications, whether they're on radio and TV or on the internet, any of the other social media outlets, the norm is that there is some kind of disclosure report required by the sponsor of those communications. The big issue that arises frequently is, when do those sponsors need to disclose the donors who gave them contributions to support the independent communications? And this is an area where the federal and state rules are literally all over the place. Many states have very aggressive disclosure laws that literally anybody who has contributed to an organization that's making independent expenditures is going to have to be disclosed. Some states have no disclosure rules at all, and there are federal disclosure rules on that. The upshot on this is before your organization contemplates making a donation to an entity that's going to be doing independent expenditures, that you investigate very carefully what the disclosure requirements are that are going to apply, because it may be a big surprise to your organization or to those who watch your organization that you are sponsoring those communications. It's probably no surprise that the entities primarily engaged in the independent expenditure activity are intermediaries of some kind. It might be a trade association, it might be a 501c4 advocacy organization, or a similar entity that's doing that. So that's something that needs to be investigated very carefully before the money is donated. Federal contractors are not permitted to sponsor these communications. That is a restriction written into federal law, federal campaign finance law, and the Supreme Court left that intact. Now, I want to draw a distinction between super PACs. Those are another kind of entity. It is a PAC, just like the other PACs we've been, similar to the PACs we've been discussing. These are fully transparent. These are not like C4s where funds often are not disclosed. The donors, the money coming in and the money going out of a super PAC for its independent expenditure activity are fully disclosed, and donors should be aware of that. So with that, let me turn things over to Heidi to discuss some compliance strategies and takeaways, and take us home on the presentation.
Thank you. It's important for an organization to adopt controls for its political giving, political engagement, and the reimbursement of expenses, as well as the payment of those expenses. This is done through establishing good record-keeping procedures for political contributions and other reportable expenditures, so that you can timely and accurately and with completeness prepare any reports that are required. It's also important to have a good understanding of what reports or registrations may be required before you engage in the activity. And on a periodic basis, provide training or other materials to key groups of employees about the rules that apply. That would include government relations departments, accounting, anyone that has authority to disperse funds or interact with public officials, or those that are, especially those that are running the PAC or have oversight of the PAC. And including marketing people, people who would be reaching out to those in the restricted class or outside the restricted class. Informing employees that all of their monetary as well as in-kind political contributions and expenditures should be approved in advance by the organization to ensure that there's no trip-ups or missed reports. And finally, designating a go-to person internally who can respond to any employee questions or run any questions outside the organization to counsel to ensure that there's no legal issue with the proposed activity. Are there any questions about anything that we have discussed today? We're happy to go into more detail. Due to the time, we could have spent a lot more time on certain topics that we discussed.
Looks like we don't have any questions, and I'm just going to mention one other point, which harkens back to when we were talking about solicitations outside the restricted class. There is an ability under the FEC rules to solicit folks who are outside the restricted class, but it is on a very, very limited basis. It can only be done twice a year. It has to be done by mail. There has to be separate accounting procedures set up and segregation of funds for doing it. So while it is an option, and many organizations do that, those who do it should go in knowing that there is an additional administrative and compliance burden that goes along with that. As you can see, our email addresses are there. If any questions occur to you, feel free to reach out to us with them. We'll try to answer your questions as best as we can. Thank you for listening today, and we hope you log into part 3 of the boot camp in May. Thank you.
Thank you, Jim and Heidi, and thank you everyone for attending today's webinar. Reminder that you will receive a follow-up email within 24 to 48 hours with a link to view a recording of today's webinar, as well as a copy of the slides. On behalf of Whiteford and our presenters, thank you for joining us and have a great rest of your day.